All right, welcome to the Explainer. So, if you've glanced at the crypto charts recently, you've probably seen, well, a whole lot of red. And you're likely asking yourself one big question. Today, we're going to break it all down.
So let's just jump right in. Why is Bitcoin dropping? I mean, if you're in this market, you've definitely felt that downward pressure. So what's really going on behind the scenes?
You know this quote right here? It hits the nail on the head. There's a lot of apathy right now. And look, if you only got into crypto in the last couple of years, this feeling might be kind of new, maybe a little unsettling. But for the long-timers, this kind of meh feeling, it's a super familiar part of the market cycle.
Okay, so here's what we've got on deck. We're going to look at three different ideas for why this is happening. The classic historical cycle, a surprising parallel to a few years ago, and a simple but powerful technical signal. And then we'll talk about the most important part, what this means for you.
First up, the 4-year cycle repeats. Let's start with what might be the simplest, and honestly the most powerful explanation out there. The idea that Bitcoin is just doing what it's always done.
Right. The simplest answer is that this time is not different. You know, it's so easy to get caught up in all the noise, the new ETFs, the changing market, but the core idea here is that Bitcoin's behavior is still incredibly predictable. And those four little words, this time is different, have gotten so many investors into a world of trouble.
In this timeline, it lays out the pattern perfectly. See, about every 4 years, there's this thing called the halving, which basically cuts the new supply of Bitcoin in half. And history shows us, time and time again, that Bitcoin tends to peak in the fourth quarter of the year after that halving. We saw it in 2013, we saw it in 2017, we saw it in 2021, and yep, it looks like we just saw it again. So this drop we're all feeling, it fits the historical timeline like a glove.
But here's where it gets really interesting. Let's look beyond just the year of the peak and actually drill down into the exact length of these bull markets, from the absolute bottom to the very top.
Okay, so take the bull market that led up to that massive 2017 peak. From its lowest point to its highest, it lasted 1,067 days. All right, now what about the next cycle, the one that topped out in 2021? Get this, almost the exact same. 1,059 days.
And this most recent cycle, 1,062 days. I mean, come on. It fits perfectly right between the previous two. So the big takeaway here, at least from this perspective, is that this drop isn't some crazy surprise. It's happening right on schedule.
Okay, but what if that's not the whole story? For our second theory, let's just pretend we don't know about the 4-year cycle for a minute and look at this from a totally different angle.
So here's the thought. What if today's market doesn't really have that wild, euphoric feeling we saw in 2017 or 2021? What if it feels a lot more like that quiet, kind of apathetic peak we had back in 2019?
And when you put them side by side, the parallels are pretty wild. We've got a similar situation with higher for longer interest rates. Retail investors, yeah, they're mostly sitting this one out. And the stock market, it's still chugging along. It is almost a perfect mirror image of what we saw back in 2019.
This chart here on social interest, this really tells the story. You know why we didn't get that crazy alt season this time around, where all the smaller coins just go ballistic? It's because that huge wave of brand new retail investors, the ones who fueled the past market tops, they never really showed up this time.
Which leads to this idea. Bitcoin topped on apathy. Just like in 2019, the peak wasn't driven by this mass excitement and FOMO. Nope, it was driven by quiet exhaustion and just a lack of fresh buyers coming into the market. And here's the amazing part. Whether you're a believer in the rigid 4-year cycle or you think the 2019 economic parallel is the right answer, both paths lead to the exact same place. The conclusion is the same, we're in a bear market. The drop is happening for a solid reason, even if we can debate exactly which reason it is.
All right, on to our third and final piece of evidence. This time, we're going to look at a super simple technical indicator that has been historically incredibly reliable for calling these major downturns.
People call it the moving average waterfall, and it's played out like clockwork. Now, a moving average is just the average price over a certain time, and it helps you see the trend more clearly. And after every single major bull run, we're talking 2014, 2018, and 2022, Bitcoin's price does this little dance. First, it breaks below its 50-week average price. Then it goes down and visits the 100-week. And ultimately, it finds its bottom way down near the 200-week average. It's been a predictable cascade every single time.
So where are we right now? Well, that's exactly where we are. We've already dropped below step 1 and bounced off of step 2. History would suggest that the next major stop on this ride is down at step 3, that 200-week moving average.
Okay, so we've just laid out 3 really compelling reasons for why Bitcoin is dropping. But all of this leads to the most important question of all, right? What in the world do you do about it? Now, this is going to sound completely backwards, I know, but the history of this market shows that the real money isn't made chasing those exciting, crazy bull markets. No way. It's made by patiently buying during the boring, quiet downturns, when there's nothing but fear and apathy in the air.
So here's the key takeaway. The people who saw those life-changing returns last cycle, they were the ones buying when things looked absolutely terrible. I mean, think back to the whole FTX collapse, right? The data points to a surprisingly simple, if, let's be honest, kind of boring strategy. You accumulate when everyone else is scared, and then you just wait. Real investing usually isn't about excitement. It's supposed to be boring.
So, yeah, the market feels pretty dull right now, and prices are falling. But if history is any guide, this is actually the most productive time for a long-term investor. This drop isn't a sign that it's all over. It's just the cycle resetting, building the foundation for the next big bull run. So the real question is, are you patient enough to see it through?